Hey everyone, welcome back to Corporate Decoder. Today, we're diving into Turning Point Brand's annual report. This one's a bit like that dusty antique store find. Seemingly old-fashioned, but might have some hidden value for adult smokers out there. Not for kids, of course. Let's get to it. Turning Point Brands is in the business of making and selling smoking-related products. Think rolling papers, cigar wraps, and moist snuff. The company owns some pretty recognizable brands like Zigzag and Stoker's. They're playing in two main areas, alternative smoking accessories and what they call other tobacco products, or OTP. The first is a dynamic market experiencing robust secular growth driven by cannabinoid legalization in the US and Canada, and positively evolving consumer perception and acceptance in North America. The second, basically everything that is not cigarettes, has seen low single-digit consumer unit annualized declines. Turning Point Brands ships its products to a network of distributors and wholesalers all over the US and Canada. They're focused on growing by launching new products, expanding into different categories, and making smart acquisitions. But recently, they decided to discontinue one of their business areas, the liquid nicotine business. Namely, they've moved away from liquid nicotine and vapor products. They contributed that entire segment, called Creative Distribution Solutions, to a joint venture. This means Turning Point Brands is now primarily focused on their Zigzag and Stoker's lines. This is a strategic shift so they can focus their efforts on their core strengths. In the Zigzag segment, they're all about rolling papers, cigar wraps, and other accessories. The Zigzag brand is number one in the rolling paper market. They also have a majority stake in a Canadian company that focuses on the cannabis accessories market in Canada. They continue to innovate and experiment with new products, including the trendy hemp and natural leaf wraps. The Stoker's segment focuses on moist snuff, chewing tobacco, and modern oral nicotine pouches. Stoker's chewing tobacco is the number one discount brand overall. They even have a partnership to sell tobacco-free nicotine pouches. They expanded their oral nicotine product offering to include white pouch nicotine products with varying nicotine strengths. So what makes Turning Point Brands competitive? First, they've got those big, established brands, Zigzag and Stoker's, that have been around for over a century each. Second, their products, especially the Zigzag line, are riding the wave of growing acceptance of cannabis use. The legal cannabis market is projected to keep growing. And finally, they're good at launching new products and moving into new categories. They've built a sales and distribution network reaching over 220,000 retail outlets in North America. Their sales team uses data to understand changing trends and target the stores with the most potential. They've got a lean operating model that relies on outsourcing production, which keeps their costs low. Their business is also pretty stable, even during economic downturns. Now for some numbers. In 2024, total net sales increased to over $360 million from $325 million the year prior. The Zigzag segment accounted for about $192 million, while Stoker's brought in over $168 million. While sales went up, profits stayed roughly the same. The company is exposed to foreign exchange risks as much of its inventory is purchased with euros. They do have a plan to use contracts to minimize this risk. Of course, there are risks. The company relies on a few key suppliers, particularly Swedish Match and Republic Technology, so any disruption in those relationships could be a problem. There are also increasing regulations and potential tax increases that could hurt sales. And as they mentioned, litigation, bad weather, cyber attacks, or issues relating to climate change could hurt their business. Also, their certificate of incorporation could discourage or prohibit acquisition bids or merger proposals, which may adversely affect the market price of our common stock. The company notes that as more states restrict marketing of tobacco products, it will become more difficult to appeal to customers, and there can be no assurances that the sales, marketing, and distribution efforts of competitors will not be successful in persuading consumers of our products to switch to their products. They're also involved in a few legal proceedings, mostly related to product liability claims from their vapor products business. This has been going on for a long time. Finally, let's touch on the company's approach to its employees. As of the end of 2024, they employed 310 people. They emphasize employee health and safety, development, and retention. They have various training programs and offer benefits like healthcare, 401k matching, and paid leave. The company is focused on environmental efforts such as lowering vehicle emissions and expanding recycling efforts. They also have a plan to deal with and manage cybersecurity risks with a special cybersecurity committee and other safety precautions. So, what's my take on turning point brands? On one hand, you have strong brands with a history. On the other, they are in a highly regulated and controversial sector with sales dependent on consistent and cost-effective access to raw materials. They're pivoting away from the more controversial vapor products and focusing on what seems to be working: brand stability and lower relative regulatory pressures. Given all these uncertainties, the company's future performance is a bit hard to predict. I would keep a close eye on these factors before making any investment decisions, of course, after doing your own research. That's it for this corporate decoder. If you found this breakdown helpful, give it a like, drop a comment, and subscribe for more deep dives. Thanks for watching.